Tackle today. Matt and Mark Justice out with all of the news, the important charts, breaking it all down for you in a concise manner. Markets having some intraday volatility following the release of BLS annualized revisions on labor. We'll talk about that more in depth in the economic section here in a couple minutes. But from just a good old-fashioned technical perspective, Matt, a little pause, a little consolidation heading into Jay Powell was our base case. Right now, that appears to be what we're getting, isn't it?
Well, after Monday's rally, yes, that does seem to be what we're getting right now. Last 2 days in the market, a little bit of slowing momentum. The news coming out on the BLS, obviously, you're going to be talking about that here in just 1 second, but it was known information coming into the market, and maybe even a little bit better than anticipated. But we can talk about that here in a second. But just giving context for the price action, why we're not down a little bit more on news that we had to revise 800,000 jobs in the market over the last year. You would have thought that would be, create a little bit of downward pressure on price. But once again, if the information is already known, nobody in the market is going to get too spooked by that information. And it just goes to the concern that the market has on the labor side, which I don't know if you can get above 100% expectation on the Fed cutting interest rates. The only real debate in a couple weeks from now is, do they do a 0.25? Do they do a 0.50? The labor market data today maybe adjust that a little bit, but from a technical perspective, just slightly overextended here. Expect a little bit of slowdown and expect either a pullback here or some degree of consolidation as we were going into the central bank this Friday with Jackson Hole and that extremely important speech out of Powell on Friday morning. And so, yeah, I'm not too surprised we're seeing a little bit of hesitation here in the marketplace with a nice old doji in the market. Now, Mark, that does not mean every doji is created equal when you're looking at the broad market itself. And so oftentimes you want to look at a heat map to try to get an understanding of the lay of the land. And honestly speaking, the doji in the market kind of makes sense here today because you're not seeing relative massive outperformance in one area of the market versus massive underperformance in other areas of the market. You're seeing a little bit of up in consumer cyclical because some earnings came out today in consumer cyclical, but in general, the entire market is taking a little bit of a day off the last couple of days, and I expect that tomorrow as well. We'll see what tomorrow provides. We start getting into more important economic data tomorrow than we had at the very first of the week. So maybe we spark a little bit tomorrow, but I'm not too surprised we're seeing some hesitation from a technical perspective because we are overextended going into some pretty important information coming into the market on Friday.
Yes, absolutely, absolutely. And the economic news that came out today was is one of those, like, have a conversation on what it means for the podcast, but the Bureau of Land, the BLS, came out with their annual report. Now, Matt, I do not remember a single time in history where the market has ever cared about this report, but where economic data has been extra sensitive on algos and everybody is debating, the health of the economy. This is having a few more eyes on it than normally. And so the annual report, where they look back over a year-long period from April to March of 2024, showed that the number of jobs that have been stated created were about 800,000 more than actually occurred. The original estimate was 2.9 million. The revised estimate around 2 million. And so this number was revised lower. Now, most of the major banks out there had that somewhere between 600 and a million jobs. So this kind of came within the estimate. It wasn't a real surprise to the market. Markets had kind of anticipated this, causing a little bit of intraday volatility in the short term. But Matt, it's hard to see that this is going to have a tremendous impact on narratives moving forward when you have Jay Powell speaking on the path of policy 2 days from now.
Listen, this data is going to be looked at from a political perspective. This data is going to be looked at from a people that are not familiar with this, being like, oh my goodness, is the labor market okay? To traders and investors and market participants over the last year, every single labor market number has been revised lower for an entire year straight. This is not surprising, shocking data to market participants. This is extremely well known data to market participants. But my take is really, really simple. The market itself has already been concerned about the labor market.
That's a good take.
And so what this does is just bring other people to that same level of concern. And the people that are most important in this conversation are the central bank itself. And does this data change their anticipation on the rate cut conversation? And so, like, the data just goes to a confirmation to the market that the labor market was not as strong as previously reported on. But once again, in that time frame, we had 12 out of 13 labor market numbers get revised to the downside. And so people that have been around the market, this isn't going to be too shocking of data. And hence
No,
why you're not seeing a massive move in the market today on this information, because this information, once again, although quite shocking, when you actually think about it, right? 30% lower is the revised estimate versus the 2.9 million jobs. We came in at 2.08. That's a massive headline miss, but it probably brings everybody else to the same level that the market was already at with the concern for the labor market.
yeah, I know. And this is going to have a podcast conversation, and it probably puts even more emphasis on Jay Powell on Friday, which he already had the spotlight of the week as the most important thing to occur. Certainly is going to, what does Powell say on Friday? We'll continue to talk about during the course of the week in Traders Lounge. But Matt, as the macro environment and as the charts roll, there's individual stock news, every day impacting certain companies. Some earnings this morning, some news out of Ford. What do you got for us today?
Yeah, three stocks in the news here today. TJ reported earnings, Target reported earnings, and then Ford is in the news here today, as well as they have a little bit of a revision to their policy on EVs that we'll talk about. TJ Maxx was in it from an earnings perspective, and they came out with beats on EPS. Revenue was also a slight beat, 5% revenue growth year over year. They also slightly, and I do mean slightly, increased forward-looking guidance. The guidance was 403 by 409. That's 2024 fiscal year guidance from an EPS perspective. They came in at 409 versus 413. So they adjusted the low end to the top end, and then so a slight increase in that forward-looking guidance. But on the retail side, with concern on the consumer in the market, that's a good number for TJ Maxx from an earnings perspective. So you certainly have to say TJ Maxx crossed the bar from an earnings perspective here. Target, on the other hand, they not only passed the bar, but they probably did slightly better in my estimation than TJ Maxx. They came out with a 19% beat against expectation. That's better than TJ Maxx here today. They came in very similar on the revenue side of the equation with a slight beat, with a slight growth year over year. TJ came in with 5%. Target came in with around 2.7% year over year growth. They also increased forward-looking guidance fairly I don't want to say aggressively, but what they did do is they tightened up the range of their guidance, which basically tells me that Target has a better understanding of the environment that they're going into. And so I do see it as an increase in guidance from the 860 to 960 range. Now they tightened that up from 9 to 970. So they slightly increased the upper end of the range, but more than anything, they kind of tightened that range, showing a little bit more confidence in their guidance itself. And then the third stock story of the day here today is Ford, as they've had some interesting decisions and policy changes regarding their EVs, their EV technology, and so they make some massive changes here today, and it's going to be seen as good over time. There's no doubt about that, in my opinion, because EV and the EV strategy specifically out of Ford was the number one reason why I removed it from the Tackle 25 last year. I did not have confidence in their business model moving forward, made the change to GM, and this was one of those reasons. And so Ford announces today that they are delaying their EV production of their new EV plant. They're canceling the planned 3-row electric SUV, and they're going to prioritize hybrid models and electric commercial vehicles, which was where they were at before a couple years ago when they changed to a more of an EV pure strategy. Obviously, the market saw that fairly decent initially. Let's see how the market has seen that as the trading session has taken hold here. In looking at the first story there, Mark, in TJ Maxx here, obviously you're going to be talking about not TG Maxx, that would be TJ Maxx there. Obviously, we're talking about a little bit of a gap up when you're talking about beat on EPS, increasing forward-looking guidance. You're going to see the market celebrate that, especially in the
It had
last week.
already been one of the best retail performing stocks of the year.
Well, it had a really good first part of the year and then did not get caught up in the volatility of
yeah.
the last month or so. Today, gap up, hold the gap out channel. You got to be looking at TJ as a breakaway gap type scenario with neutrality in the short term, intermediate uptrend, just a continuation. And TJ looks pretty good in that environment. On the other hand, if you're looking at it from a trading perspective, a gap up to 120 holding the level, you would certainly be looking at momentum based patterns, and the momentum based patterns are high base and those bull flag type patterns where you talk about inside candle analysis. On the other front, the other T that reported in earnings here today, that would be Target. Target gapped up as well. They had a very similar report, but the issue is the candle here. The gap up with the sell down behavior, that puts it on exhaustion gap type fill. And you would be expecting in that environment for the gap itself to fill before you look at any secondary pattern. And so the look from a the look from a fundamental perspective is fairly decent. The look from a technical perspective is mixed. You got the gap up positive, you got the sell down profit taking session a little bit negative. Obviously, the positives outweigh the negatives, but you would be expecting a little bit of gap fill here. And then you look at some degree of pattern around that 150 to 155 level. And so keep an eye on Target in any retracement type scenario. And then the last stock story was obviously Ford. Ford has been struggling recently. Like I said, at the very beginning of the year, we did make the change in the Tackle 25 to roll into GM, and that was a fantastic decision out of the Tackle 25.
No, that was all you, bro. You did a great job on that call.
Well, I like to give credit to the team there, though, bro.
That was all you, bro. You did a great job.
I remember the conversations, but no, it was an easy decision, I want to say, because of the concern with Ford. But this is a good decision out of Ford to delay their EV. The EV was it was a little bit of a cash grab out of Ford, and it was sucking out the opportunities in the current environment. So I do think this is a good decision out of Ford. How will the market respond? You got to work off this deeper bearish retracement. You got to start talking about reversal analysis, but it's not ready for prime time yet. Good news, not ready for prime time yet. Still like GM over Ford. That's all we got for stocks in the news here today.
Yeah, Matt, the commodity and crypto markets are pretty muted today. A little bit down here, a little bit up there, not a lot, but let's fire through the charts real quickly as we close out our tackle today.
Yeah, gold here just kind of showing a little bit of hesitation. Obviously, we're seeing that in the broad market. Last 3 candles, you've tested low, you've tested up, you've tested down again, and hasn't really done anything. Just kind of stuck right around that 25.50 level. Still looks pretty good, developing a little bit of a short-term high base against a previous multiple time frame breakout, but gold does look fairly good right now. I expect more further upward movement in price in gold over the next few months. Silver here, give us a pattern here. Very simply put, give us a pattern here. And if that pattern develops in a high base at 30, I'm going to like it. And if that pattern develops at 28 in a head and shoulders formation, I'm going to like it. Or that would be an inverted head and shoulders formation, I'm going to like it. But give me a pattern here on silver. Silver's starting to set up. However, on the copper side of the equation, copper's still hovering right around that 420 level, which we've been talking about pretty much for the last 3 weeks in copper analysis, just tracking its own short-term reversal here as well. Having a little bit of difficulty breaking 420, but then again, It's not easy to break resistance. The same way it's not easy to break support. And so it's not abnormal to see some hesitation in front of resistance breakout, specifically when everybody and their dog is anchoring against PAL on Friday morning.
Yeah, I know. I mean, in these charts, hesitation, taking a few days off, they lead to the next trading setup each and every time. Bitcoin giving a little look, go to church before we close up.
Yeah, on the Bitcoin front, just kind of developing overall deeper retracement, kind of hovering right around that 200-day moving average. Not a pure setup in any capacity. A lot of chop, a lot of volatility, no doubt about that. What can get cleaned up? Well, I've been looking at IBIT here, Mark, and it has an opportunity to get cleaned up on a breakout of 35. If you do look at that from a technical perspective, you got the 50-period moving average right around 35, the pivots right around 35. That would be a bear stop out momentum based short-term trade. Nothing on the longer term side, as Bitcoin still has a little bit too much volatility on that side of the equation.
Yeah, everyone, listen, we are going to continue these conversations in the Traders Lounge. Matt and Frank will be there today. We have a wonderful community. Come give it a shot. 15-day free trial. Go to tackletrading.com, sign up for that trial, and come see what this amazing community is all about.
We put the education in application every single day, ladies and gentlemen, at Tackle Trading. So hopefully we can see you there by signing up for a free trial at tackletrading.com. We are out for today.